Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at some of the major currency pairs. Today's date is November 19th, 2024. Let's get started. Lots of geopolitical concerns. U.S. stocks are lower. The yields are lower as well as Russia saber rattles nuclear potential as a result of the U.S. Supplying long and agreeing that U.S. long-range missiles could be shot into Russia from Ukraine. We're in this lame duck period between Biden and Trump, and of course, Putin is going to cause his few ounces of trouble during that period, maybe push the envelope a little bit past the edge. And that's what we're seeing. As a result, stocks are sharply lower in pre-market trading. As I said, the yields are lower as well, and risk or flight to safety type of currency concerns. The euro versus US dollar, meanwhile, is ping-ponging between resistance up here against the old lows going back to earlier April. These are the old lows for the year, down to 1.0600 up to 1.0610. The high price that we saw late yesterday moved right into that swing area right through here and fell. We saw a rotation back to the downside. That rotation took the price down into this swing area down here, and you have to go back to back here to see the significance of this area right through here. You can see the 1, 2, 3 different lows within that area right through here that ultimately led to the move to the upside. So that's what that level's importance is today and going forward. If the price were to move below the 1.05158 level, it would open the door for further selling down toward the close from yesterday or from last week, which came into this swing area down here before the low price from 2023, which was all the way down at 1.0448. So those are the targets on the downside for further momentum in that direction. 105.15 to 105.31, that held. Below that 104.83 up to 105.00. Finally, 104.48 was the low price from 2023, so be aware of those. But the price has already moved higher. We're currently trading at 1.0587, so we're closer up to this swing area right through here. As long as the price remains below that level, the ping-ponging and the buying and selling can continue in the euro versus US dollar, move above that level, and we could see further upside probing as the failure below the low prices from 2024 is a disappointment to the sellers. Let's take a look at the dollar versus yen next. And if we look at the hourly chart for this currency pair, we fell below the 200-hour moving average in trading here, well, once and twice, and tried to rebound back toward that level, but have found some sellers that pushed the price back down toward the 61.8% retracement. That 61% retracement is of the move down from the high price that we saw in the month of July to the low price that we saw in the month of September. 61 comes in at 153.397, and although the price did move a little bit below that level and trading here today, we did hold it more recently and push back higher. Also in play is the 100-bar moving average on the 4-hour chart, which we're just above now as well at 150. That 100-bar moving average comes in at 153.65. We are just above that level, currently trading at 153.98. Well, not just above, but above it. So be aware of those levels on the downside. The price will need to go below those levels to increase the bearish bias. But right now we're seeing the buyers take more control above those levels. So finally, let's take a look at the sterling versus US dollar. And if we look at this currency pair, there are a couple things in play as well. One is this area right through here where we had different swing highs here, broke above this level right through here, moved to the upside through here, and then came back down toward that level here, and here before moving to the upside. We moved back down toward that level in trading last week. Initially found support, then broke below that level, running to the low of that swing area through here. In trading this week, we did find support right here and here at the higher of this swing area down here, and that's so this area between 125.96 and 126.13 is going to be a level that we need to get to and through on the downside to increase the bearish bias. On the top side, the corrective move off of these lows right here moved up to the high of this swing area through here, which has some different periods where it worked really nicely Here's where it was formed, where this area was formed mostly, where price, number of different swing lows are here forming a floor for this currency pair. We fell below the floor, traded above and below it through here, and then finally moved away from that level right through here. We came back down toward that area right through here, which increased that level's importance. And in trading last week, admittedly, we traded above and below the level. This week, the rise off of that level came up toward that high of the swing area, where we did find willing sellers not once but twice right through here before moving to the downside. So we're above support down here, below resistance up here. If either the upside or the downside is broken, then we look for further momentum in that direction, or further momentum in this direction to the upside for the sterling versus US dollar. So there you have it. A look at 3 of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.